This is Leading Forex YouTube channel, and today I want to share with you some secret information which I believe will help you. This is actually a write-up, so I am going to read it along with you as we listen, and then we take a clue. So the whole issue is why most of the traders are doomed. Forex traders. So we're going to read this article together and see the headway to it. So secret number one, why most of the traders are doomed. I'm your admin, Kofi of Leading Forex YouTube channel here in Ghana. So let me start from the first paragraph. Anyone who starts down the road to becoming a trader eventually comes across the statistics that 90% of traders fail to make money when trading the stock or forex market. This statistics deems that over the time, 80% lose money, 10% break even, and then 10% make money consistently. An interesting point about this statistics is that it is not based on geographical region. Let me put it that way. It is not based on geographical region, age, gender, or intelligence. Everyone aspires to be in the top 10% who consistently make money when trading the stock or forex market, but few are willing to put in the time and effort to achieve this. Whenever I give a presentation, I ask those present if they want me to teach them what the 10% of traders know or the other 90%. And every time they say the 10%. To me, the answer to understanding the 10% is simple. All you need to do is look at all the books, videos, and courses available, and pretty much don't do most of it what it says. I repeat that part again. To me, the answer to understanding the 10% is simple. All you need to do is look at all the books, videos, and courses available, and pretty much don't do most of it what it says. To be one of the top traders who consistently succeed in trading, avoid making the following 10 mistakes. Mistake number one, looking for a holy grail. Traders who skip around from one method, system, indicator, or service to the next in order to find a perfect solution with instant gratification usually end up disappointed. If this describes you, stop right where you are. Mistake number two, not sticking to a plan. A methodology or a trading system is essential. The market can be chaotic and confusing, especially for someone without a specific plan of action that can be used again and again. Without a plan, you will react to the market instead of anticipating the market. Creating a trading plan is a highly individual process and usually stems from years of experience. Here at Leading Forex, we have a methodology that allows us to make sense of the market day after day. This is what we share with our clients. We follow this strict process on each and every trade we take, and we pass those trades with the exact stop, entry, exit parameters on to you. Mistake number three, improper mindset. Humans are emotional creatures by nature, but being emotional in the uncertain environment of trading can be calamitous. Almost every book on the subject of trading psychology, hammers home the idea of more discipline and less emotion. Emotions will inevitably come into play when you are trading. It is how you deal with those emotions that will define you as a winner or a loser. Mistake number 4, improper trade size. Capital preservation is paramount. Poor account sizing, risking too much per trade, is a surefire way to fail. Trading is not a sprint. It's more like a marathon, and a very long marathon at that. You will lose trades here and there. It is how you deal with losses that matters. At Leading Forex, we follow strict account sizing rules, which we pass on to you. We tell you exactly how much to risk per trade and exactly where to exit. Whether that exit is at one place or multiple places, there is no guesswork for us in trading, which is what makes us successful. Mistake number 5, poor risk to reward ratio. There are 2 reasons traders end up with a poor risk to reward ratio. And number 1 is they don't have a trading plan and instead simply react to the market. Number 2, they simply can't hold their winners, but they hold their losers. I love that point. They simply can't hold their winners, but they hold their losers. Having a plan gives you the confidence to see your analysis through to the end. At Leading Forex, we have a 80% win to loss ratio, and our risk to reward ratio is better than sometimes 1:2. Mistake number 6, holding on to losing trades and getting rid of winning trades. Here we go again. The old "but I don't like to lose" argument. It is human nature to hold on to losses in the hopes that they will rebound. You will have losing trades. Get used to that fact. Focusing on how you manage loss rather than trying to ignore it will put you ahead of the crowd. On the flip side, traders often get out of winning trades too early, so they don't have to deal with giving profits back. If you want to lose money in trading, holding losses and getting rid of winning trades is a surefire way to achieve it. In trading, it's much more important to be profitable than to be right. And in order to be profitable, you need to cut your losses early and let your winning trades keep working for you. Mistake number 7, thinking of trading as black and white. It might pain you to hear this, but trading is not a black and white process. There's a lot of gray. Another losing analogy is the red light and green light system. Okay, let me take that part again. It might pain you to hear this, but trading is not a black and white process. There's a lot of gray. Another losing analogy is the red light, green light system. Having a simple 3-step process to help you frame and identify a trade setup is okay, but experienced traders know that nuance. Is where real insight lives. Some days, trading is indeed A plus B is equal to C. Other days, trading is A plus B is equal to 1, or D or F or Z. If trading was A plus B is equal to C all the time, everyone will know exactly how to win. This is not realistic. Mistake number 8, overtrading. This one is simple. If you are trading simply for the sake of trading, you are overtrading. Trade because you see genuine opportunities in the market. Trading is not like a 9-to-5 job where you are rewarded for constant productivity. You don't get paid to push buttons all day long. You get paid by making good winning trades. It is that simple. Movement in the market doesn't mean you must trade. Trade when things line up for you. Be patient. Wait for setups to occur. And when they do, take action. If you want to succeed at trading, you need to act like a winning trader. And winning traders are patient and wait for setups. Mistake number 9. Not taking trading seriously. I am often puzzled by how often people approach trading with a different attitude than they do in any other money-making venture. Trading is a business, and like most vocations, it takes time to learn how to perform well. People go to school for years to become doctors, but many so-called hobbyist traders think that simply reading a few for dummies books or scanning some indicators will suffice. This attitude towards trading is like throwing darts at the wall with a blindfold on. Shortcuts and scams don't work. Trading is not easy, and you can't learn it without effort. You can, however, enlist a seasoned expert like us if you want to guide you. Mistake number 10. Not having a successful mentor. Any successful trader once had a mentor, coach, or a service helper who helped him to formulate a plan and strategy and learn how to be successful. I am not exception to this rule. Yes, there's a lot of free advice available, especially on the internet. You can spend your time sorting through it. Guess which nuggets of information are authentic and valuable, and then hope for the best. If you are really an ambitious deer, you could, in theory, learn to do just about anything with a few books and an internet connection. But will you learn to do it well? And how long will that take exactly? Do you really have that kind of time and discipline? Working with a mentor is a powerful shortcut that helps you tap into proven trading approaches so you can start making money faster. When you enlist a mentor, you are essentially buying knowledge and training that is an investment in your future trading. Over time, as you learn a framework that works, you will eventually be able to add your own investing twist to it. But like a house, a solid foundation is the very first step. So these are the 10 mistakes that traders often do. And just like I've read them out one after the other, I want to just give a paraphrase or explain them in bits so that we end this video. So the first thing is looking for a holy grail. Most people think that the forex market is a holy grail. They think that it's a place to just go into and pack a lot of dollars into their accounts. Please, if that is what you were told, based on screenshots you saw, based on some information you saw on social media or wheresoever, some blogs or websites, then I'm sorry. You've been given wrong information. Forex is not a holy grail. Forex is just an investment, and you are the controller of that investment. And the ultimate goal is to make profit bit by bit. That will add up to be more than what your bank would have given you. That is all about Forex trading. So if you've been told that Forex trading is a holy grail, I'm sorry to say you might get disappointed. So please clear off that mindset, thinking that Forex trading is a holy grail. You can make a lot of money from Forex if you learn it right. You can make a lot of fortune from Forex if you take your time and follow strict rules and become disciplined and patient. But if you have the mindset of just making millions overnight, thinking that the Forex market is a holy grail, then that is a big mistake. Point number 2, not sticking to a plan. So you need a plan in place. A plan is different from a strategy. A strategy is what helps you to execute a trade, either to buy or sell. That is a strategy. But a plan is how much you are looking for in a week whilst you trade, in a month whilst you trade, at the end of the year whilst you trade. What is your goal? What is your aim? That is a plan. How much are you willing or hoping to make at the end of the month on your capital? How much profit are you looking out for on your investment? That is a trading plan. So you need to have a trading plan in place so that your strategy can help you execute that plan. If you don't have a plan, you'll just be wandering in the market. You will just get lost in the market just like that because you do not have a plan. And so you just trade anyway, anyhow. And that will not help you. So you need to stick to a plan. You need to develop a plan. You need to develop a strategy, which I think will be the surest way to go. So if you are currently trading without a plan, then it is a big mistake. Point number 3, improper mindset. Anyway, the Forex market is an emotional market. And so if you do not psych yourself to be able to make correct decisions, you will end up losing money all the time. Traders sometimes become impatient and they close winning trades. And then sometimes too, they allow losing trades to keep going on with the hope of coming back in their favor. Look, if you do not have the proper mindset, if you do not accept defeat when it comes, if you do not allow sometimes some winning trades to give you more, you will keep jumping A to B and C without moving forward. So you need to have a proper mindset. You need to have a clear cut of what you want. And then be sure to accept defeat when it comes. The Forex market is not a win-win affair. Sometimes you will lose. And when the loss comes, or when the losing comes, accept it. When you lose, accept it. And move on. Because there are other opportunities waiting for you where you will win to cover up what you lost. So you need to have a proper mindset. Never think that the Forex market is always a win-win affair. The losses will come. But the most important thing is your winning rate must exceed your losing rate. So the proper mindset will be a good guide. So if you do not have the right mindset to trade, if you get so emotional when you are losing, if you feel like this is not the right place to be when you begin to see your trades in negative, then I'll guess and tell you that you are not fit for this work known as Forex trading. You need to psych yourself and think straight before it's too late. The next point I'll talk about is improper trade size. Because people think the Forex market is a holy grail or a get rich quick syndrome, they enter into the market with lot sizes that are imaginable. It's way beyond what they should do. But because they are looking for more profit, they end up putting lot sizes that will endanger their account rather than make them profit. So if you are a trader, you need to have a proper lot size put in place whenever you are trading. You need to know how much to risk in the Forex market. I will always say with this point 4 that whenever you want to place a trade, do not think of how much you are risking in terms of pips, but always think of how much you are losing in terms of the lot size you are choosing. Because the lot size you are choosing will determine how much you should lose and how much you should gain. Because if I use a lot size that is smaller, and we are all aiming for the same thing, and you use a lot size that is bigger, when we all lose that trade, I'll lose small, you lose big. Although we are all aiming for the same lot size, we are all aiming for the same profit. I beg your pardon. We may all be aiming for the same profit margin, and then with the same lot size, or maybe different lot sizes. Supposing I use 0.01 and you also use 0.10. We are using different lot sizes, but we're targeting 100 pips and maybe a stop loss of 50 pips. When we both lose, you lose more than I will lose. So improper trade size is very, very dangerous. We need to be cautious of what lot sizes we are using in order to help us get the best that we want. And then poor risk to reward ratio. We, those at Leading Forex, supposing you haven't taken notice of it on our channel, we have a Telegram channel, and you will find the link to the Telegram channel in the description of this video. When you join our Telegram channel, you will see that we have a risk to reward ratio that we use. If we are aiming for 100 pips, then our loss rate is going to be 50 pips. And in ratio, that will be a ratio of 1:2. So if we are targeting 100 pips as TP, our stop loss is going to be 50 pips. That is 1:2 ratio. If we are targeting 20 pips as profit, then our our stop loss is going to be 10 pips. If we're targeting 50 pips as our TP, our stop loss is going to be 25. That is 1:2. That is the ratio that we use. And sometimes our ratio even gets better when we are in a winning trade. That is where we do the scaling out. We scale out in the market, trying to move our stop loss into profit, and then allow the trade to run to give us more profit. So you need to have a proper risk to reward ratio that will help you to constantly make profit in the forex market. Number 6 is holding on to losing trades and getting rid of winning trades. I think this is self-explanatory. You aim for a target in the market and you realize that you are in profit, but because of impatience, because you do not have the right mentality in the market, because you are trading on emotions, you feel like, let me not give back what I have made as profit to the market. So it's better for me to close it than to wait for my target to be achieved. When that happens, you are giving out your winning trades. But when the trade begins to go against you, you feel like this has gone way too much against me, so let me wait for it to come back, or let me wait for a rebound. And sometimes you keep waiting and waiting and waiting, and nothing happens until you see that your account is blown or empty. So you hold on to losing trades, and then you get rid of winning trades. If you are a trader like that, you will never make profits in the forex market. You will always be on the losing side. So you need to be able to avoid this mistake. Mistake number 7, thinking of trading as a black and white. And with that, what I simply mean by that is that you think forex trading is 1 + 1 = 2. So all that you are looking for in the forex market is 1 + 1 to come. Please, that is not the way to go. The forex market is a dynamic market. It keeps changing. It keeps forming patterns and structures that are constantly different or new. So you must be able to adjust accordingly. The forex market has no one single formula. If it had that formula of 1 + 1 = 2, then everybody will know how to win. But because the forex market is not like that, that is why you need to know the inside out of the market, so that Once a certain pattern is being formed or a certain market structure is being formed, you can quickly identify and know how to adjust yourself, or know when to trade or when to execute a trade and when not. So you need to be able to identify that and think and know that the forex market is not just a black and white thing. It is not a formula that is constant. It is not a 1 + 1 = 2 always thing. The market keep changing. The patterns, the structure, the movement keeps changing. So you need to adjust accordingly when you see anything new in the market. Now, number 8 is overtrading. Most traders sit behind their PC or their phone or tablet the whole day trying to catch more trades. Catching more trades will not make you a profitable trader. It is good to maybe even have a single trade in a week, which is perfect to give you profit, than to enter multiple trades daily and then end up losing all. So overtrading simply means you don't have the patience to wait for things to line up the way you want. But since there is movement, since the charts are moving, you feel like you need to catch some profits. And so you keep entering trades. You just keep entering trades, and then you are just wasting money. You are just losing money. You have no patience. You feel since the market is moving 24/7, you need to sit by the PC and catch every pip, catch every movement. That is a wrong thing to do. It is better for you to have a trading plan or structure, which when it lines up the way you want it, you go in for it, and then you are sure of what you are getting. That is better than just trying to overtrade. So please, the forex market is not a place to overtrade, trying to catch every pip from all movements. That is the wrong thing to do. Number 9, not taking trading seriously. Most people think, yes, the internet is there. You can just Google or go on YouTube or other information service platforms to just grab the needed information you need about forex, and then you are good to go. I'm sorry to tell you that you'll be disappointed. There are millions of information or videos, tutorials, and what have you on the internet. But ask yourself, among all these, which one is the best to take? Which one is the best to go for? Which one is even the best to use? Who do you agree with and who do you reject? So at the end of the day, you will realize that yes, you have a lot of free information out there, but none is helping you because that free information has gotten you confused. And so you don't know what to do. So you need to take your trading seriously if you want to become a profitable trader. You need to sit and learn. Probably get a coach. Get someone to walk you through his or her strategy, his or her plan, which is a successful one, not just a gambling kind of strategy, a one you are sure of. You need such people to guide you, to share their knowledge with you, to tell you the reality on the ground. And with that, you need to take your time to experiment. Don't say you've gotten this indicator so you are good to go. You are entering right into the market to start making money. Or you've watched a certain video on YouTube, so enough is enough. You are good to go. No. Do not make such a great mistake. You need to take trading seriously. Some people think they can just use a day or two to learn everything about forex and then they are good to go. Please, that is not the case. You need time. You need to study. If it takes you 4 years or 3 years to acquire a degree at the university for your profession that you are doing, then what makes you think that it can take you just a day or two to become the best forex trader? If it takes doctors about 7 years and over or less to become doctors, what makes you think that Your profession, which is forex trading, can just take you a day or two to become the best. Don't be deceived. Don't be deceived by what you see on the internet. Don't be deceived by scammers. Take your time and learn this as a profession, and then get serious at it. And once you get that done, you will see the headway in the forex market. And then the last one, not having a successful mentor. You need to get someone as a coach or a guide to help you. And such a person must be someone who is experienced, someone who has tested the market for years and knows how it operates and has a proven strategy that makes profit. You need to have someone like that to guide you. That becomes your foundation, that becomes your stepping stone to success. Along the line, you can modify whatever you've learned from that mentor into your own way, or to suit your own style or your own way that you want to go. But you certainly need someone. You certainly need some kind of coaching that will help you to be able to get on your feet and lay the foundation that you want to become a successful trader. So do not just begin trading because you've done your own research and so you think you are a good trader. You need someone to guide you. You need some guidance. You need some counseling. You need someone to psych you up and to show you a few things or tell you a few things. So try and get someone like that. Try and get someone like that to help you in that regard. And I'm sure the aim of becoming a forex trader who will be a successful one will be accomplished. So today on Leading Forex, these are the 10 mistakes that we traders do. There are many, but I have just decided to sum them up to just 10. This is my own article, this is my own write-up, and so I feel like sharing it by way of reading to you so that we can equally grab the information that it comes with, so that we can become the traders we want to become. I mean, the best traders we want to become. So this is what I have to share with you on Leading Forex today. So these are my reasons why I think most traders are doomed, where I think most traders get it wrong, which makes them losers instead of winners. So you can read this over and over, and I'm sure you'll definitely get some information that will help you along the way. If you like this material you've just heard or read or listened to, please subscribe to this channel, Leading Forex, because there are more videos, tutorials, and lessons coming your way on this channel. Thank you for giving me a listening ear. I'll see you again on this channel. God be with us.